Hi, thank you for watching us here at Tax Talk UK. One of the common questions that we've been asked is, if I work for myself and I'm self-employed, how should I go about paying myself? So that's what I'm going to cover today. Before I do, please could I ask you to take a moment to please subscribe to our YouTube channel. That way you will easily be able to refer back to this information if you need to, as well as easily find other videos showing a whole range of topics and information on all aspects of working for yourself, including the information on various taxes. And if you could also please turn on the notifications, then you will be notified as soon as we upload new information. So let's talk then about paying yourself when you work for yourself. So primarily, this is going to be dictated by the trading style that you have chosen to run your business as. If you have decided to operate as a sole trader, you will remember that there's no legal distinction between you and your business. Therefore, all of your business assets, including the profit, are yours at the end of the period, regardless of whether it's left in a separate business account or withdrawn into your own. All of the profits for your business will be taxed as the profit within that period, regardless of whether you've taken it out of the business or not. Therefore, you can pay yourself from your business account, or assuming that you have a separate business account, and this is no problem. When you account for that in your records, it's important to understand that this is drawings, known as drawings from the business, you personally taking out the profit. But remember, there's no distinction between you and the business. So therefore, you're effectively just moving money from one bank account to another. And it's not relevant for the profit and loss of your business that's going to yourself. So what I'm saying is that it's not an expense of the business, it's not allowable against the income, and it won't reduce the profit. So therefore, when you're accounting for the money, it's important that that's accounted for as drawings. Now, if you're using Making Tax digital software and you don't already have a drawings category, and you need to create one, it's important that you create this as an equity account and that isn't an expense of the business. So hopefully that's clear. And if you're a partnership, it's the same. It's very much the same principles, although there may be things in your partnership legal agreement that dictate a little bit more, but certainly when you take the money out for the partners, it will be drawings and not an expense of the business. So if you have decided to trade as a limited company, I'm going to just assume for now, or give an example of a sole director and a sole shareholder. But in this scenario, the limited company is a separate entity from you. So if the money is in the company, then the company will pay corporation tax on the profit that it generates within the period. But that only becomes your income when you take the money from the company, or in the case of dividends, at the point that you declare a dividend. So fundamentally, there's going to be two different types of income that you may receive, and how you will pay yourself if you're trading as a limited company. So you will remember that as a limited company, the directors are those put in place to manage the company, and the shareholders are those that have invested in the company and own the company and receive a distribution of the profits. So as a sole director and sole shareholder, it can be difficult to actually take a step back and think, in what capacity am I having this income? And also to remember that the company is a separate entity from yourself. So, for example, as a director, you may be an employee of the company, and therefore through this channel the money that you receive will be salary, and it will go through the payroll. It will, as the company, you will need to set up as an employer and submit the payroll through the real time in order to pay yourself as an employee, where therefore you'll be receiving the salary and you'll receive a pay slip, and that income will be taxed at source. So again, it's especially as a sole director and a sole shareholder, it's important to understand which aspect you're looking at it from. Are you looking at from yourself as an employer, an employee, from the company, or yourself, to ensure that everything is done correctly? So if you pay yourself as an employee and set up as an employer, deduct any tax and national insurance at source, this will be an expense of the company, so that will be allowable normally for against your corporation tax, and will reduce the profit of the company. So anything that's any profit that's left in the company can then be distributed to yourself as a shareholder via dividends. Now, one thing that's important to remember is that before those dividends can be paid, tax must be paid on the profit. So if you're within the year when you're taking dividends out, you need to remember that you will need to allow leave enough money in the company to pay tax, the corporation tax on the profit, and only take what will be left after that. So if you're not sure, sometimes people may always pay everything through the payroll to ensure that there's always sufficient profit available, and that dividends aren't taken illegally, which would be if there wasn't sufficient profit, then that would of course leave your company insolvent. So that's a little bit complex and sort of beyond the scope of what we what we're looking at here. But hopefully this gives you just a general overview of I'm running a small business, I'm self-employed, I'm a sole trader, how do I pay myself, and gives you a little bit of an understanding of, depending on your trading style, how you will go about this and how you will account for this in your Making Tax Digital software. So as we would always recommend, if this for you isn't straightforward, if you've got a more complex tax situation, or if it's simply not your thing and you just can't get your head around it, then we would advise that you engage some professional help in order to have someone help you with this, because as we always say, mistakes aren't great. It's not good for your confidence. And also they can be very costly, because it can be a little while before they're highlighted, and this can have other implications. So if you're not sure on what you're doing with this, then please do seek some professional advice. But as I say, I hope this will give you a basic understanding, and even if you are have engaged a professional to run this for you, hopefully will give you a little bit of an understanding and an overview of what is happening. So thank you for watching, and as I mentioned earlier, please do remember to subscribe to our channel if you haven't already. Thank you. Goodbye.